but you have the chance to succeed and generate real revenue on chain because the chains are performant. They're not going to fail. So it's on you. Get a product out there that people want. It's happening on a number of verticals.
Mike, the reason that I got in was because you said no. Like, look, like he had trouble with so many VCs.
It's cynical. It's a absolute misallocation of capital that I believe is destructive to the crypto economy.
Welcome back to The Roll Up. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX is broken. AI can't be trusted, and users are left in the middle. Magic Labs is building something better. A verifiable agent with cryptographic guardrails. It acts on your behalf, stays within your intent, and proves every move on-chain. The first one's live, the Newton DCA agent. Automate your crypto buys safely. Try it now at magicnewton.com.
All right, guys. Well, we are here at the, I guess it's the Salon Accelerate Week here in New York City. Mike Dudas, the infamous Solana bull, PumpDotFun bull.
Infamous.
Guy who yells at me for being bearish on PumpDotFun if I ever tweet anything bad about it.
Yeah, I've had to pull back on, my face, so up front.
Man, welcome to the show. It's good to have you on. It's been a couple of times. I'm sure most people know who you are, but I'll just super brief rundown of yourself and Six Man Ventures would be great.
Absolutely. So Six Man Ventures, early stage crypto VC firm, primarily investing at the app layer. So, if you think of a traditional VC, you're seeing these big L1, L2 infrastructure deals, not our model and not our specialty. So, I'm in my 40s, I've had a career before crypto, and it's been in business building.
Okay.
It's something we understand. So what we're looking for is, hey, how do we invest in founders who are using the things that public blockchain networks enable to build businesses that couldn't be built before? And so those can be apps, anything from DeFi to DePIN to stablecoin and payments to speculative fund and trading and much more.
Yeah. Let's get right into it. What do you think about the recent competition of PumpDotFun with these new platforms?
Yeah, so I think what you're seeing is PumpDotFun's success showed that there's immense desire for tokenized assets, for the ability to tokenize things, to issue new assets across a broad range of use cases. And basically, it's the largest fee-generating event, outside of things that have existed for a decade or so, things like perps and spot
it's
trading.
0 to 1 for sure. Of this cycle.
And these are like in the same way that Bitcoin and Ethereum are crypto assets. So assets that simply in Solana didn't exist before. You now have things like Memecoins and instantly issuable tokens. It's a new sort of primitive. And so people are experimenting with it. It frankly shocks me that nobody has been successful at gaining any market share for over a year. And it's no surprise that there are a few platforms trying to challenge Pump now.
Yeah, I think the newest iterative models have been around. Okay, let's find a way for effectively token holders to capture the value that Pump is, or that insert your platform here is. It kind of picked up a bit. Like I think Bonk has one that's doing this pretty well, but yeah, I mean, there's still there's the GOAT and then there's all the rest.
So yeah, and by the way, I think that some of them are ill-conceived.
Yeah,
others I think are really interesting.
Okay.
So I'll give you some examples. So things that concern me are, and I won't name specific platforms because I think a lot of the founders out there who are launching these tokenization platforms are experimenting and iterating rapidly. But I think there are things that will get people in trouble, not just the platforms themselves, but the folks who actually stand behind the tokens. And so I think the ones that have the potential to get in trouble are things that promise more than just being a meme coin. And so what I've seen is platforms that will enable, for example, somebody to launch a token and then sort of put behind that some promise that it has a tie to, for example, a business or, an enterprise. Yeah. I think that's really, really risky. And no matter how you try to sort of disavow that the token that's launched has, any sort of direct influence on the business, people just don't hear that. Yeah. And so they hear something different. We saw this, by the way, with NFTs, and I can at length, discuss having experienced it myself, launching a golf NFT project. Yeah. But bottom line is the expectation of the buyer of these tokens when they hear that, it's tied to business X or person X is, all right, well, that person's going to increase the value. Now, I would argue they shouldn't have a reasonable expectation of that. And the people are saying these tokens are valueless, not tied to the actual business. But again, that there's just so much, there's conflict of sort of expectation versus reality. The fine print is different. And the other thing is how you market these platforms. So some of these platforms market themselves to the token buyers as like, get earliest exposure to this individual's great new thing. Yeah. At the same time, the fine print's like, but you have zero exposure to the economic upside. So I don't think that that's prudent. And I would prefer, like, Pump is pretty straightforward that like these are valueless meme coins. Yeah. Now, things have sprouted up around them, but they're launched as valueless meme coins. And I think, again, in the spirit of experimentation, people are getting into, I would say, territory that I'm a little uncomfortable with. And I'm out there on the risk spectrum. So if I'm uncomfortable, definitely worth paying attention. That being said, I've seen some really interesting and positive ones, which are, hey, slap a token onto a fun, call it vibe coding app. I think that's different in the sense that the token, like I haven't to date seen like tremendous promotion that like, by the way, the token has value tied to this silly fun app that I created. Right. It just offers a broader palette for experiment and how these platforms, the vibe coding with token ones have been marketed. I've not seen like an explicit marketing and promotional push that they're going to derive, sort of value. Bottom line, I'm not exposed to any of those things. We're obviously exposed to Pump. Yeah. And I'm taking kind of a wait and see approach. It's risky stuff. It's, I think, fun stuff. And by the way, Chris, crypto has a history of benefiting from bold founders and frankly, bold market participants, pushing markets forward. Yeah. It's also had a very dangerous pattern of the same thing. So I'm optimistic that, we're moving in a positive trend of instant issuance and doing it, by the way. I think the key now is with Pump, with some of these bonding curve based platforms, you have a very predictable sort of growth rate in the token price. You have locked liquidity. It is harder to rug than the good old days, the bad old days when you'd like send your coin, send your dollars to an address and hope somebody issued a token. That was bad. So
that was wild.
We're improving.
Yeah. So I actually think that you bring up a more kind of broad point here that's hitting the market, which is around this idea of, like basically saying, okay, there is some value attached to this token and the value is derived from some sort of revenue being generated from a product. And then effectively that product, distributing that revenue back to the token holders via, a buyback or via some sort of like yield, which was kind of effectively not possible in the past, kind of like Gensler's, crypto world. Now Hyperliquid is really pushing the boundary there. And then I think other teams are starting to do it as well. But I've spoken to my investor friends. We have a fund, Robbie and I, my partner is just PropCap, invested probably like 40, 50 companies last 2 years. And so, often when I do these conversations, it's just quite selfish. It's like, all right, let's see what the smart people are thinking. Yep. And so I've spoken to, different investors and I'm like, okay, like how much does this matter to you guys? Like are you actively looking for teams that are like, okay, we have this clear revenue path and then we're clearly going to take that money or that capital and we're going to, issue some sort of dividend, buyback, et cetera, on the token to create this kind of natural buying pressure. And it's kind of been a mixed bag. of reviews as to like, oh, sometimes it's not enough, doesn't really make a difference, or oh yes, that's super important. So like I'm just curious your perspective here, and if like Hyperliquid is setting a standard here, if that's not important, what are you seeing from the app layer?
I believe that so if you'd asked me this question 3 months ago, I would have had a very different answer.
That's what I think as well. Yeah.
I would have said you can have like purely mimetic long-term value, or you can have, basically value accrual fee generating value.
Yeah.
By the way, I think that's still the case for, call it legacy coins. But I do believe it will become increasingly difficult to launch fully mimetic coins that will have sustainable, durable value. There's just too many of them launching.
There's just way too
much noise and too much skepticism. I think we're on the backside of the launch of the purely mimetic, zero value, Murad's list of 10, you need to believe forever, SPX 9000, XBT, you missed the first Bitcoin. I genuinely and deeply believe, and I'm pretty good at this stuff. Like I helped launch Bonk, we invested in Pump. I have a pretty good handle on like what's next.
Yeah.
I do think that we're moving away from new launches of purely mimetic coins.
But
now,
even for like, research coins or like VC coins as well, like a typical L1 with like
missions.
Okay.
That's great question.
Okay.
But I would say by the way, there will be exceptions to everything. Somebody's going to launch a meme coin with no value. It'll go to like 10 billion and like, see Dudas, I proved you wrong. And so, there will be examples. That's a given.
Okay, but that's like the meme
as a class.
Yeah.
But I think the more important question that you're asking is on tokens launched by projects, protocols, companies that espouse to have real value.
Correct.
We are absolutely, unequivocally moving away from the era of, we don't have clarity on, regulatory, legal. We, can't, accrue value.
Yeah, it's been an excuse because of
and I understand it deeply. We've had portfolio companies. I've even participated in projects where that's been the case, and you legitimately couldn't. Yeah. It's a different era. Anybody who's telling you that now is not a team that you want to back.
Yeah.
Because they just don't. They can't see 3, 6, 12 months ahead to what is happening. So bottom line is the demand in market is, if it's not a pure meme coin, like a legacy one, and again, there's no institutions or big serious capital that has any edge in investing in pure meme coins. Genuinely. I mean, we saw it. Yeah. There was the cabal for a while. Like everybody knows what was going on there. Like some people turn a blind eye. They're like, that guy was nice, so it's okay that he did it. It's not. We don't need to name the people. That was bullshit. Okay. And they rob people blind. We've moved past that era. In this era, if you have a coin and you profess that there's something behind it, the expectation in market is that there's going to be value derived. You mentioned the two most common models, and the two most common models are, Buyback and sort of dividend or fee-based payments. Yeah. And I think the most common and popular one right now is Buyback.
Yeah.
Hype, B&B.
Yeah. These are doing it.
Exactly.
Yeah.
So these are models, the exchange tokens have been doing them for a long time.
They have,
B&B, and have established that like they can do it consistently.
Yeah.
There are other benefits to those tokens over time, to VIP customers, to access to Launchpad things. So if you trust the issuer of that token and the team, now we can get into whether that means, are they security-like products, but based on the way the legal and regulatory, environment in the US and other places is evolving, unclear, unclear that they'll be viewed as securities. But the point is, market expectation is for these tokens to have value, as you say, the VC tokens, or the exchange tokens, there needs to be some mechanism by which the value that the product is achieving, or the protocol is achieving, is in some way captured by token holders.
You just got to give people a reason to buy it.
You have to. You can't. So you can't, Pump.Fun, if they were to ever launch a token, launching a meme coin would not be it, right? Yeah. Like the market,
no, it would be.
They'd say, no, you've generated more than 700 million in revenue in the last year. Why do we have a meme coin? You've used your protocol. So this is obvious stuff. So Hyperliquid as a recent example, but let's stick with Hyperliquid. What I struggled with, I'm, again, in my 40s, I'm, pre-boomer. You think of
boomer and crypto
bottom line quite a lot, right? Like,
bottom.
Like, hey, you think of like, well, how you're like profits, what are profits? And I think the big flip and switch here has been on the buyback. And sort of people who come from more traditional finance backgrounds will often be like, well, buybacks aren't prudent because you're purchasing, especially if you're really successful, you're purchasing, an ever increasing asset. It's not a good use of capital. But what seems to be happening, and we have a wonderful investor on our team, William, who's modeled this out internally for us, is like it actually basically if you can show, and Binance has done this, Hyperliquid's done it. If you can show that there's like predictable support, that you're taking the actual value, the proceeds of the business. Hyperliquid has a product people are using. They love it. They're using it in increasing amounts. They're taking increasing market share.
Yeah.
It's incredible to watch. And then they're pushing that value directly back into the token for token holders with the buyback. I guess like at some point they're probably purchasing what you might call a bad price, but it's a different psychology and dynamic than traditional buybacks in equity. Now, we don't have enough data. We don't have enough examples of successful protocols in crypto doing this to like develop patterns and models. But by the way, that's the beauty of it. There are no experts in virtually any area of crypto. Like everything's new. And I think what you can see from what is happening with Hyperliquid is that the confidence that all the value is, or a significant amount of value is going back into supporting token holders, is giving folks confidence in the token itself.
Yes.
And then the token can then act as a superpower in other ways, right? They can promise future things in the same way that, by the way, Binance did with BNB. And they could say, hey, we're going to launch, Hyper EVM. And then, you'll be able to stake your hype and, by the way, earn fees from securing the network. And I don't know, like that's pretty speculative. Like, I don't know if they'll have fees, but I can see what they're doing, with the fees today. So it kind of gives people confidence in what might happen in the future. So bottom line is, if you launch a token at a high FDV, low float with no value accrual mechanism, those things are dying. Like there was one on Solana, Sollayer. And I remember looking at it, and Sollayer, like 3 weeks ago or something, or a month ago, was valued at 2x the value of Jito. Jito has 20x the stake, actually has a value accrual mechanism, and was trading at half the value of Sollayer. So within like 4 days I tweeted about it. Stuff makes sense. It flipped. And now I think Jito's 2x the value of Sollayer. And that wasn't me.
No,
there were other people in the market, I believe, who were just waiting for somebody to state the absolute obvious thing. So the market's flipping to value.
Yeah, I think so. And it just feels like now that the hornet's nest has been slapped a couple of times, it's just going to become more and more of this kind of frenzy where, if you don't do this, then there are consequences. And it just feels like that. I don't know, man. I've been in the space for 8 years, and it's felt like it's been on easy mode, and I think it'll continue to be a really good and investable space. But it just feels like this year is going to. I think we're going to look back at 25 and be like, this was the year where like we realized that, as a space or collectively, and perhaps it's been realized on and on again in the past, where it's like, okay, guys, there's going to be winners and there's going to be a lot of losers.
Exactly.
Like it just, it's like the bifurcation is happening.
It's easy mode in terms of the things that I have always, and we've probably always hoped would happen, which is easy mode. If you're generating significant amounts of revenue because you have a product that people like, and then that allows you to accrue value to the token. And again, there are some folks who don't have tokens, so they do it through equity. Historically, it was somewhat of a lottery. It was like, oh, like this brand, Cardano, is
For sure.
really good. And
100%.
they've whipped up a community and fervor and bots and this and that. And genuinely, we are moving away from that. And I think it's a positive.
Yeah.
The other thing is there really is enough money in the ecosystem now. We're above, Bitcoin hit an all-time high.
Yeah, today.
2 hours before you and I.
Pizza Day is tomorrow.
It's exciting.
Yeah.
Very exciting.
It is exciting.
There's a Pump Pizza event. I can mention it because it's going to be after this podcast.
Nice.
So it's a big celebration.
Yeah.
Two very different ends of the spectrum. But the point is, there are real fees, real businesses. And so what that means is you will fail.
Yeah.
In many cases, but you have the chance to succeed and generate real revenue on chain because the chains are performant. They're not going to fail. So it's on you. Get a product out there that people want. It's happening on a number of verticals.
Yeah. So what has been your recent deployment strategy when it comes to the venture side? Because we probably wrote like 10 to 15 checks in 23 or like late 23. I mean, one of the ones I'm most excited about is we did Pudgy Penguins in 22. It was super cool one.
Shoot me in the face.
Did you have a chance at that?
Yeah. So
at the 50 mil val, I think. Yeah.
20.
Wow.
Yeah.
Yeah, we did the 51.
Past NFTs weren't happening. I mean, I literally tried to get my partners to do it, and we had the chance to put $1 million in. We did.
Oh my gosh.
Anti-portfolio.
Yeah, I mean, we wrote the check like
good for you.
After FTX collapsed, about a week or two after.
Yeah.
So
we were August 2022. They needed just $1 million.
Yeah, we were like December.
I didn't supply it. And
well, that's what he said. That's the reason. Like, Mike, the reason that I got in was because you said no. Like Luke, like he had trouble with so many VCs.
Yeah. They said, and you know what? Like that's fine. The beauty of this space is that like Capital's, like Luca's a special founder
for sure.
Like he found a way to keep momentum, keep things moving. Yeah. And the right capital came in and he raised from a mix of believers. Yeah. And then finally, I think 1KX led that, consumer firm that does, I mean, they do more than that, but you got to survive. I mean, it ain't easy.
Yeah. So that was 22. We did that. 23, we did maybe like 10, 15. And last year we probably were like 30. Just like angel sizes anywhere from like 10 to 50. And it's just like our capital. But this year we've done 2.
Yep.
And I mean, we had to pay taxes and like do all this other stuff, and the market was down. So like we were kind of like also in like a bit of a limbo, but I've also just like not been that interested in what's been happening. So curious, like what where your head's been at the last 6 months and like what you're seeing that's interesting. Obviously not specific deals per se, but just like sectors, ideas, thoughts.
Absolutely. So our investment pace has slowed down from where it was. And this is not unusual. So what we find is that just as crypto, metrics, market usage, et cetera, go in cycles, you often find that venture funding at specific stages goes in cycles. So it's been a cycle lately. What I've seen is that, candidly, Series A and B and some of the growth things, like I've seen bigger investors looking for those breakout protocols and wanting to put money to work there. And if I followed kind of like we're friendly with the Alliance folks, we invest in a lot of their portfolio companies. Yeah. And I think they've said it's been a little harder at the earlier stage. And I don't think necessarily it's indicative of lack of quality founders or ideas. I just think it's appetite. So right now, the last 6 months, we're an early stage fund, and there's just been more activity at the later stages. And by the way, that pulls us because we have portfolio companies that are growing. So we're helping them, raise those rounds. And then you're taking some of your time. At the same time, you have a lot of funds. So structurally in the market, you've probably heard and seen, but a lot of crypto venture capital funds are raising right now.
Yeah.
And so it's
struggling.
It's a better raise market. We weren't raising. We just started in 2025. Yeah. We weren't raising the last couple of years, but we heard it was horrible in 2023, 24. Yeah. Now it's a market where you can raise.
Okay, good.
But what's happened is in order to invest in funds, people want capital returned to them. In other words, they want what's called DPI. And so there hasn't been a lot of that. And That's, by the way, it's been worse in traditional.
Oh, really?
Even in crypto venture, 2021, 22 venture funds.
Yeah.
Those vintages haven't returned a lot of money. How many great successful tokens or equity outcomes have there been from 2022 companies? Yeah. So that tide is starting to turn, which is giving confidence, by the way, to funds again. Yeah. Meaning you can kind of like see the other side where, and I've talked to tremendous numbers of folks, venture managers who've been in market, who believe they'll be able to return meaningful capital, at some point this year. And therefore they can raise their next fund.
Yes.
We're not fully deployed at all at 6MV, so we're investing. All right, back to your original question. Yeah. So that's like the market. Right. There's I think the mega funds that do a little more late stage have a little more capital. The earlier stage funds are not investing at the pace they have been. And so what's happened is there hasn't been that much, like many early stage rounds relative to, I would say even 2023, 24, there were more earlier stage rounds getting done. The tide is finally shifting. Yeah. And the reason is when you're funding an earlier stage company, you're looking, or protocol or project, whatever you want to call it, you're saying, hey, we're going to fund this for a couple of years. I think you can confidently do that today. Okay. Bitcoin hit an all-time high. Like it's Ethereum finally,
don't jinx
the CPR worked.
Don't jinx it, Mike.
The CPR worked. It's clear that Solana metrics are trending in the right direction. Yeah. We have a move chain in Sui that I can't even pronounce it, but that it's finally looks like there might be some signs of organic life. They were working that thing pretty hard for a while, but we've finally got some signs of organic life. That's exciting. So you've got the base layer, the platform to build apps. Yeah. You have people building apps and across a lot of different use cases. So we've seen the social stuff. We started this conversation with token issuance. Yeah. That's cool. That's fun. That's the casino. But earlier today I was at a stablecoin conference. Stablecoin issuance is up, I think $100 billion in the last, 12 months or something. Like people are actually using these things, not just as base pairs on centralized exchanges. Yeah. They're using them for business use cases, for remittances, for payments. And you have big companies like Stripe, Visa, MasterCard. So anyway, point is an on-chain economy is absolutely starting to be birthed, and it's better than the bullshit that we were doing in fintech for 15 years. We were putting lipstick on a pig of traditional financial networks. So that's the real unlock. Okay. So there are companies now that are getting funded. Yeah. Stablecoin companies, and by the way, if stablecoin companies are getting funded, meaning consumer or business, the downstream effect of that is there's more money on chain. And they're promising, so the companies that are offering stablecoin enabled banking like Stripe or Dakota or others, for them to offer yield, they're going to be dipping into DeFi, right? They are bringing now capital into these markets. Yes. So now, you actually have, at the same time that you have DeFi native companies like real world asset companies, like bringing different types of assets on chain, different types of yield. So there's this flywheel developing, and we're actually building a real economy. And I would call this the crypto app economy. The beauty of it is a lot of the front ends are starting to say, the business banking companies, the consumer, stablecoin or self-custody companies are saying, hey, we'll give you $1 account anywhere in the world, which is super attractive. And by the way, you're going to be able to transact in the real world. We'll give you a debit card or whatever to connect to real world merchants. Yeah. But you're also going to be able to participate in that DeFi yield. And then, by the way, inside of the app, there's going to be this little Coinbase wallet-like browser or MetaMask or Phantom-like browser. And you want to participate in the degen economy. So they all work together. Yeah. Now that's the stablecoin wedge. On the other side, you have Pump, you have Moonshot, bringing people in with, Moonshot with the Trump, with the Trump coin and then bringing folks in, then you can introduce them to other products. So point is, we have a lot of people now getting these self-custody accounts, putting money into it, and then a bunch of different apps that are starting to get folks to stick with it. You need stickiness. We haven't had that historically. We've had, the NFT craze, then it went down, and then what's next? So what we've been doing, to go 5 minutes back in the conversation to when you asked this question, we've started investing consumer again, pretty aggressively. So we funded a company called PumpDotFun. It's basically, imagine So Rare, but with liquid player tokens. We think that's so exciting. It ties to people's everyday experiences. So that's one that we love. We're investing in a company called Worm, a prediction. We're so excited about prediction marketplaces. We've been looking for the right team for many, many months, and they have a really nice design. And all these things are going to work together to get folks to keep their money in a self-custody account after they've, sort of bridged it over from fiat world.
Tired of multi-chain headaches? You need Omni. Omni makes being on-chain feel like you're online. Perform any action on any chain in less than 2 seconds. It's all powered by SolverNet, Omni's breakthrough SDK for cross-chain speed, scale, and cost. To kickstart adoption, the Omni Foundation is offering $10 million in rewards for SolverNet-powered apps. Start earning today at omni.network.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Yeah, it just begs the question of like, why do God's work of investing in all these applications to push the frontier of crypto forward when you can just, invest in infrastructure for a potential better return?
It's a great question. So what's going to happen? So to be clear, that's not available to retail. Okay. So you're going to have cynical venture funds, and like I could name them, but like why? We know the funds who just invest in infrastructure.
Is there anything wrong with that?
So it distorts the capital markets.
Okay.
They're raising money from the same LPs that I am.
Yes.
And I would argue that I've onboarded 10 to 100x more people to crypto than some of these funds.
More impact.
Now, they may have returned the same amount of capital per dollar invested as I have, but I have a much more useful, much more productive dollar invested than they do in terms of like what we're doing, the mission, the vision.
Yes.
So, investing in the next DA layer that's overvalued that you can dump your SAFT before the token goes live, invest in Movement Labs. Like just look at that cap table. I don't need to name names, look at that cap table. We got it. Like it's easy. I named them. All right. There we did. I did the thing I said I wasn't going to do. It's cynical.
Yeah.
It's a absolute misallocation of capital that I believe is destructive to the crypto economy. And if we don't start calling these people out, it's going to keep happening. By the way, it's happening in motion day in and day out.
Yeah.
So the LP dollar that's going into the people who allocate to the infrastructure that everybody knows isn't going to get used, that gets pumped by centralized exchanges so that there's tons of trading volume and they get their fees. Let's get rid of that crap. Like nobody wants it. We said last cycle we weren't going to do this again. And it's happening again. So anyway, it's an economically rational thing for those funds and those founders to do. But it's a misallocation of capital because there is no long-term value being created. In fact, there's long-term value being destroyed. A select group of venture capitalists, founders, and their LPs are going to make a ton of money, and it is straight pulled out of the pockets of people who are duped.
Coming back to the venture side, and I appreciate the candid advice as well, and answering that kind of on the spot. What's something that you've learned through your venture career that has shifted the way that you do investing now? And I'll just give you a quick example. It's like, from my perspective, I learned that like path dependency is something that like you can't foresee nor control, but it has like such an outsized impact on the profitability potential of any given investment, right? So, you write something here in this, in this sector, and then all of a sudden, ChatGPT has its moment, and then that leads to like X, Y, and Z, and now either you're perfectly positioned for it, or it's like, well, we don't even need this anymore because of ChatGPT. Yep. And it's just like a very broad example, but that's something that I've learned that you can't really control, but like that you have to be like, thinking of. Just curious about, some of your key learnings.
Yeah. So I'll give you a couple, and I think it relates to what you just said. So one is in crypto specifically, more than anywhere else, it's all about people. Okay. The idea often changes. Magic Eden being an example, it was a Solana NFT marketplace, a little one that we loved. We invested in it in 2021 in like a pre-seed round before Paradigm, and it's a totally different business now, right? Yeah. It's a wallet, it's a cross-chain, app that exposes people to every element of crypto, but just the people drove that. They were absolutely incredible. So you're backing people, and the idea very well could change, but the success is going to track them. By the way, that's true of all venture, but for things to change, they change so quickly in crypto metas. An example that we didn't invest in was Tensor. Tensor was an NFT marketplace, and now they have the Vector app and a bunch of other things. They're extremely successful. That would be in our anti-portfolio. We didn't invest in them, but the people are very nimble and have adjusted dramatically. Getting back to people matter. So what I've found in crypto investing more than and I was, an angel investor and a founder in traditional tech for a long time. I would say that crypto people on average are less, I would say it's not surprising, like they're anti-establishment, this and the other thing. They honor contracts less, they honor terms less, they're more shifty, they're harder to trust. And it is really difficult to get the outcomes that you expect, even if you have like a legally binding contract. So I have been really surprised because I even approached as a founder my ventures in a very traditional way. Okay, like we have this contract, like, you sign this safe or this agreement and I'm going to get your money back. I'm stunned at the deep level of adjusting terms and, pushing people to, basically sue, and we don't sue. So you're like constantly in conflict, particularly in success scenarios. It's not just us. I see it across the board. It's distressing. It's disappointing.
That just actually recently happened to us.
Yeah. The markets are total and utter chaos.
You hit a really nice win on a team, and then now they're trying to change the vesting schedule on you. And it's like, you don't have a choice.
Like, and they'll use, what do you mean? Yeah. So that's like the lightest of it. I mean, we'll just knock the tokens road, and I'm exaggerating a little bit. But the point is, I mean, you will actually have that, and then you'll have to like negotiate. The markets are a bit chaotic. I've been very, very surprised. So the other learning out of that is, so now you're dealing with people who are unpredictable. The markets are deeply unpredictable. So these are highly volatile markets, where we go in 2 to 3 year cycles that you just don't get in like SaaS markets. You might actually start to get them in AI. Like it feels like AI, like the biggest areas of traditional venture are changing such that they're actually changing as fast as crypto now. So it's going to be very fascinating and fun, I think. But the magnitude of wins is just staggering in crypto. Okay. You could put a small amount of capital in, you could, have very small teams and have just massive outsized wins. An example would be Steppen, right? Like we only put 100K in, and the scale of the win, investing at 15 million and it, traded in the billions. It's just staggering. And so that's one where, those are the only stories you hear about though. Right. So like, it's like, there's a lot of failure in between, messiness in between. So the outcomes, you have to, so one other key learning, you have to like smooth it out. You have to try to remain, and I'm not a calm guy at all, you can tell. My partners are. It's good to have a partnership with different personality types, but you're always trying to smooth things out because you have these like really big things, and hey, maybe I'll realize the value on it, maybe I won't fully realize it. You'll have these things that seem like they'll fail, but then they come back. The cycles go up and down. So anyway, but what I would say is, given the amount of capital deployed, the outcomes, the 3 trillion plus in total asset value that we have in 15 years is pretty astronomical.
Yeah. Mike, go Knicks, man.
Go Knicks. We've
Huge
got
series.
game one today.
Huge series.
Versus the Pacers. So I'm excited. Going to the game. I like to say it's going to be the Solana headquarters tonight.
That's right.
Hopefully we have a lot of folks from Accelerate.
I think there will be. It should be a good series, man. Thanks for coming out.
All right. Thanks for having me.